And we are live. This is Travis from Trade with Travis, Expert Advisor Reviews, Carter Kyle Capital. Hope everybody's doing very well on this Monday morning. I have 6:30 a.m. bright and early. Hope everybody's doing very well. I'm going to go ahead and go through the disclaimer. And then after that, I'm going to make sure everybody can be able to see me when it comes down to all of the pages that we are on. But happy to be able to see each and every one of y'all. If you are inside of the live stream, please make sure that you end up dropping a hi inside of the chat box as we are getting started, going through a new journey and trying to go through everything else like that. For people that have been with me for a while, you know what I'm talking about. But let's go ahead and get started real quick. I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from the education, you can be able to make your own informed decision. I understand that trading involves risk. It involves risk of being able to make money. Also involves risk of being able to lose money. So please keep that in mind. Now, so understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you can end up making money today. As we go through, you're going to show myself onto the screen. I see that a few people are live. What's going on, everybody? If you're not familiar with who I am, my name is Travis. Been a Forex trader for the last 6 years now, going on. And essentially what we end up doing here with Trade with Travis is that we end up going about 25 to 30 minutes to be able to see what's happening in the market, see if there's any other possible opportunities to be able to make for us being able to get in, teach, talk about education, talk about mindset, talk about strategy, and which we're going to end up talking about a lot when it comes down to these next few months as we go through. And obviously prop firm season is starting for us and being able to get it started. But also, more importantly, just being able to go through and make sure that everybody ends up having a fun time. So if you have any ideas or anything else like that, please make sure that you place them inside of the chat box as we end up getting started. So let's go ahead and go from there. What we end up doing, if you're not familiar, or if this is your first time being able to watch, we always go through the disclaimer first, and then not the disclaimer, we always go through and take a look at what's happening from an economic calendar first. After we end up going through the economic calendar, then after that, we go to the big three. The big three is comprised of United States dollar index. We end up taking a look at oil. We end up taking a look at gold. The reason why we look at those three is because it it correlates very well to United States dollar index. We end up taking a look at oil. We end up taking a look at oil for the correlation with the Canadian dollar. We take a look at gold for the correlation with the Japanese yen and Australian dollar. And then after that, also, we end up taking a look at our automated systems to see how well they're doing. And what they have been going through when it comes down to their overall challenges and everything goes like that with groups such as FTMO and trying to get started with Myforexfunds, but having a little bit of issue for us being able to do that as well. But we'll talk about that. We'll talk about that as we go through. All right. So with that being said, let's go ahead and take a look at it. Today, it's going to end up being a trader's day. There's no high impact news that's going to end up overall affecting the market. Remember, we are going into the second week of the overall month. Remember, the second week of the overall month is always a recovery week. It's more of, okay, this is what happened with non-farm payroll the first couple of days. You want to be able to see how the market's going to end up reacting based off of it. It may end up being flat, and then after that, you should see that the market should go ahead and start making this move.
I want to go put my tablet.
Mm-hmm.
On my tablet.
Not right now. You want to say hey? Since you up, you say you want to come in the office. You want to say hey to everybody?
Yeah.
Okay, well, come on and say hey. Say good morning.
Good morning.
There we go. Go ahead.
Good morning. I'm going to say good morning. I got my boss.
Okay.
Okay. Good morning. I got my boss.
Okay, there we go. Cool.
Dad.
What's up, baby?
And now I can play my tablet.
Huh. How about this?
No, I want my tablet.
Baby, your tablet's in the kitchen. All right, so.
Is that Ellie? Give me that.
Hold on, put it on. Turn the volume down just a little bit. All right, here we go. Okay. Zayna, what's going on? I hope everything's going well. Hopefully, I end up saying your name right. Sometimes I butcher names, and hopefully I end up saying that correctly. But here we go. We end up talking about how today's going to end up being a trader today. We end up taking a look at that overall. Let's go ahead and get into the big three, and we'll talk about two trades that were taken last week. based off of what we end up talking about. We'll go with gold first because that's the first one that popped up on the screen. Typically, we end up doing it based off a weekly, then a daily, then after that, we end up going from there. So, from a weekly perspective, what ended up happening before we actually end up getting into the trade? Um, Market ended up having a strong support at 16.18 right before October, before it really started pushing up. From there, it ended up having a solid consolidation where the breakout area is right around that 1811 number, and the support was right around 1765. Right before the holiday break. So I'm saying right before Zane. What's going on, Zane? There we go. Um, um, Turn the volume down, baby. Turn the volume down. Turn the volume down. Turn the volume down. Um, right before the Christmas break, we end up taking a trade on gold right before it started being able to make its pop. And then after that, subsequently, we end up taking trades based off of counter trend line break. So the first trade ended up happening right here in this area. We end up getting out before actually the Christmas break and the low volatility. It fell back down to 1789, which was good, where we end up making profit off of that. Then from there, it ended up popping up again. End up taking a trade right on the 29th. For some people, I know I personally didn't take a trade until the market got back up here in this point because I really don't like trading after Christmas into the New Year's. And then after that, we end up talking about two other opportunities that could have happened. The first one was watching this market being able to go through this counter trend line break. Once that ended up happening, we end up saying, hey, you had an option to be able to get in. That ended up happening right around the 1839 area. We end up saying overall that the take profit was going to end up being 1872. It ended up hitting 1872 on Friday with non-farm payroll, which means that the United States dollar is showing signs of weakness at this particular point, and gold is actually showing signs of strength, which means that more people are a little bit more fearful of what's actually happening in the market with the United States dollar, which is not necessarily a bad thing. The United States dollar ended up having a very good year last year, so we're starting to see a little bit of retracement when it comes down to that. Now, consequently, when we end up taking a look at US yen, you should see that US yen actually end up falling as well because of that correlation, meaning that the Japanese yen ended up getting strong. So with Skywalker EA and stuff like that, you should see that you end up having a little bit of pop to the downside based off of that movement. But because this market has completed this overall daily D extension and is starting to be able to U-turn, being in the sell zone, I would not say that I'll be interested in being able to make a move at this point now. If you didn't get in at 1839, there's really no reason to be able to chase it. There's a D extension that's kind of left off right around that 1891 area. But the reason why we said 1872 because anytime that you end up breaking a resistance, you will typically go to a resistance, and the market has memory. So the market ended up breaking past this overall area, and the overall highs was at 1872. That's the reason why we end up getting out at 1872 over here, which means that we are in a good position to be able to clear. Now, as the market ends up making this slight retracement, and as the United States dollar starts to have a little bit of retracement today, keep in mind that we are in the sell zone. It typically takes about 7 to 11 days for the candlesticks to be able to get back into the buy zone. So be patient on gold. There's nothing really there at this particular point to be able to jump in and be okay with. United States dollar index. We end up having two orders on United States dollar index, which is kind of funny because both of these did not trigger at this particular point. We end up talking about how gold ended up making this move to the downside, but this one did not trigger at all. So as we go through, United States dollar ended up pushing up to 13,556. Then after that, fell all the way down to 12,815. 12,815. And then from there, as the market kept on pushing down to that point, we see that if it's starting to find a little bit of support. Don't necessarily mean that it is at this particular point. It ended up breaking below the actual support area where we would like to be able to get in, but it did not hold. Because it did not hold, I did not place a trade in. So currently, right now, this is probably the move that I'm looking at, probably eyeing a little bit more closely. I want to see if this market is going to end up going back inside of consolidation. If it goes back inside of consolidation, there's really no trade to be able to take. Just being honest, as we end up taking a look at that. From a daily perspective, we see that it tapped 12,815. Then after that, started to be able to pop up. I would like to be able to get in once the market ends up closing. So at this particular point, if I'm you, I'm saying pay attention to the 1 hour time frame. We end up having that market drop and fall below that actual point. See if there's a counter trend line break that actually ends up happening that pushes you below the actual that actual position of 12,815. And then after that, start looking at being able to make your sales down to 12,630. The reason why we say 12,630 is because, once again, if the market breaks the support, it will go to a previous support. Talked about how the market has memory. It's pretty much the same. Let me go to the daily so everybody can be able to see it. The reason why we're saying the daily, I was saying that the market is going to end up falling down to that position, is because the last time it ended up finding a true support was right here in this area right here and right here. So it would not surprise me if the market does break down, that it will break down to that area first before being able to make the next pop when it comes down to that movement. Now, is there a reason why we should suggest that it could go up? Yes. The weekly is in the buy zone. With the weekly being in the buy zone, and with the market already falling down almost at this point, I think 12 weeks or so. How many weeks has been? It's been about 16 weeks at this particular point. We could see that the markets could start be able to make a U-turn to the upside, meaning that the United States dollar will start to be able to make its push back up to the upside, trying to go after 13,827. The market has not had at this point, it has not had a healthy retracement, as it has not hit the 382 as of yet. Let me make this transparent so everybody can be able to see that number. The market will be healthy if it breaks below 12,748. Until then, what I'm going to end up saying is I'm going to hold off. So United States dollar index going into today, seeing how the market's going to end up reacting. Unless it ends up breaking through, there's really no move on that pair. So pairs like Euro, United States dollar, US yen, Australia, United States dollar, I will be a little bit more cautious, as you'll probably see that all of those pairs are still in consolidation as we go through. Let's see. Jerome Henry, what's going on? Hope everything's going well with you. Type in a while yes for everybody, if that makes sense when it comes down to these overall pairs. If it doesn't, I'll explain a little bit more. If there's a pair that you'd like for me to be able to take a look at, make sure that you end up placing it inside of the chat. U.S. oil, let's take a look at that real quick. Oil is still inside of a massive consolidation. I'm going to be very quick with this one. The support of oil as it breaks down is at 69.87, so we can say 70. Hey, how can I better identify tops and bottoms? What's going on, George? Good question. So let me answer that. I'm going to answer that while I'm going through this overall pair and kind of make it a little bit easier. As I go through and take a look at any trading pair and kind of understand where the tops and the bottoms going to end up being, one, you want to go to a higher time frame. If you end up going to a higher time frame, starting off with the weekly or the daily, you can be able to clearly see based off of maybe about 5 to 6 candlesticks that they are kind of grouped up in certain areas. Once you end up seeing where they're grouped up in certain areas, kind of like what's happening with this one, that one, and that one, and it tried to push up right there. And we can see that the natural support went right there and right there. Then after that, you can be able to make a box to be able to highlight and see what those areas are. Now, keep in mind, as you go through your trading, what you'll end up finding out is that trades typically end up going right around whole numbers, right? It's not necessarily going to end up being a foolproof plan. But if I'm looking at 60, 69, 87, then I'm automatically telling myself that that's 70. Right. And as you go through and you can be able to take a look at it more, you can kind of get a little bit more detail in the overall areas. But we can say that, okay, well, oil is having a support at 70 and there's a resistance at this particular point at 82.53. So I'm going to say 82.50. So you know what your actual range is going to end up being. Now, the strategy that I teach here as we go through from a manual perspective is called a vortex strategy, meaning that we end up taking a look at these pairs and kind of relay it back to what's happening with volume profile. More than likely, when you end up seeing the weekly being inside of a zone like this, you're going to end up seeing from a volume profile perspective, and I'm going to show that on TradingView when we go through US 30, that you will see a large volume and a large cluster of high volume nodes inside of that area. Simple rule: you do not trade in high volume nodes. If you don't trade in high volume nodes, and that means that you take yourself away from being able to have 33% chances of being able to win. You take your chance, and simply put, if you take yourself out of trading 33% chances of being able to win, then that means that you're trading inside of areas of low volume. As you trade inside of areas of low volume, then that means that you're going to end up putting yourself into better positions to be able to win. Keep in mind, you're not the consumer, you're the casino, which means that just like in Vegas or anything else like that, the house always wins. The only way that you can be able to win is by putting yourself into positions to where you have a 70% chance or better to be able to win. And stop fighting with everybody inside of the market. So as I go through and I take a look at this, the reason why I won't take a trade on oil, the same reason why I won't take a trade on what's happening with the United States dollar index, is because it's inside of this area right here. It's inside of a consolidation area. Excuse me. So at this particular point, until it ends up breaking out of this market, it's not taking my money, or I'm not putting my money in on this actual trade. Once it breaks out of this market, then after that, we can be able to talk. It's the same thing that ended up happening with gold, and the reason why we got into that trade. I'm going to go back to gold real quick and just kind of show it as we go through, because there's really no trade on U.S. oil. So same deal. Market went into consolidation. We end up identifying that there was tops and bottoms right around that 1811 position, so 1810 and 1765. As soon as it ended up breaking out, we end up having an order once market ends up breaking out, because we're actually going with the direction of the actual trend. And we're actually trading with the people that actually won the battle in that particular case. And once we end up doing that, then it's essentially like being inside of watching a car wreck, being in that actual traffic, and then after that, once you see what a car wreck is, or you get close to where everything is kind of clearing up, you have that free lane of space. That's the area where I like to trade. I know it's kind of long-winded, but hopefully that answered your question. So I give another perfect example right here with US 30. Everybody, we end up taking a trade on US 30 on Friday. We end up having two pending orders. If you end up taking that trade on Friday, you end up winning on that trade. Congratulations to you. Now let's break that down on what ended up happening. As we go through and we take a look at it from an Ichimoku cloud standpoint, we can see that the market is bullish. So we end up having a idea that the market was going to end up staying bullish at this particular point. Now, that volume cluster that I was talking about, George, is right there. You end up seeing that there's a lot of high volume that's actually happening in this node, but there's a little gap in between here of actual space where there was low volume. So as we go through and take a look at that, I dropped down to the 1 hour. Mainly, I really dropped down to the 15-minute. But we end up seeing that the market just came from being able to have its highs up here at 34,690, and the support was at 33,300. It broke down and then went inside of another consolidation area because we was inside of another high volume node, which was right there. If you notice, there's a little gap in between right here, and that's the position where I want to be able to take advantage of. If we could be able to take advantage of that position and be able to trade it all the way up till right before the point of control actually ends up going from there, then that means that we won't have to fight with anybody. Fatty, what's going on? Hope everything's going well with you. So in this case, what we end up doing, and the 15-minute shows it even better. We don't want to trade inside of the consolidation area. It only gives us a 33% chance of being able to win. This is a no trade area. High volume nodes, absolutely not. Don't want to trade inside of that area at all. But if you look at that gap in between right here, we end up placing a pending order right when the market ends up breaking out, and we want to get out right before that high volume node starts. If you do that, you will win consistently. If you do that, you'll win consistently. We end up showing that all summer. And typically the summer is where you end up having the least amount of volatility and the most consolidation that you end up having. So those breakout positions or these free lane spaces are well worth the time of being able to wait. End up taking an order in at 33,460. We end up getting out at 33,600. Placed in that trade. That trade was in for about, or the pending order, that order was in for about 10 days. Finally ended up triggering. Then after that, we end up getting out in that position. So currently, right now, is there a position to be able to get into right now to be safe? Answer is no. Reason being is going back to what I ended up saying before, George. Here's the high volume node. We're in the next high volume node. So typically, what does it mean when you take an entry when volume liquidity slows down? It just typically means that consolidation is going to happen. And I don't like trading consolidation. Matter of fact, I hate trading consolidation. So I'd rather wait for the breakout of that move to happen. Let everybody else fight. Let everybody else figure out and lose their money inside of this area because they don't know that it's consolidation. Once you end up spotting out what a consolidation is, it makes it easier for you to be able to make a move confidently. So currently right now, when the market ends up breaking out, market has broken out of this area, went inside of this free lane space. We're back inside of this consolidation area or this large consolidation area that ended up happening for more than, how many days was this? For more than, no, that's bars. I want to look at days. Where we at? Okay. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay, I'm going to say more than 20 days. I'm not going to count all that. But more than 20 days, market ended up building inside of that consolidation, fell below, but could not break. Could not break inside of this box right here. So as we push through this overall area, as soon as it ends up breaking out of this consolidation area right here and breaks above that 33,880 area, then don't be surprised if the market ends up pushing up. Don't be surprised if the market ends up pushing up to at least 33,410 or 34,100. So if you like me, you want to be a little bit more patient. I would wait for the market to be able to break above 33,400 before being able to make the trade. Put my stop loss just below the next high volume node and then go from there. I literally just gave y'all a strategy away, but we've been talking about that all summer, so it's well worth being able to show. Some people inside the room would kind of attest to that, hopefully. All right, I got time for being able to show a couple other things. Let's talk about what ended up happening with Nas, and then after that, we'll talk about what's happening with our FTMO challenge and trying to get everything situated with Myforexfunds. Let's see, Nas 100. So same deal. Market went inside of this large consolidation, fell all the way down to had a free run area all the way down to this point right here. Once it ended up doing that, started building up consolidation. And how can I? No question. No, I think TradingView is a great place to be able to talk about these things. How do you trade the breakout? It ended up being a pending order. So it'll be a buy stop or a sell stop. So hypothetically, give you an answer like this. Take a look at this overall area right here. We can see that we end up having natural resistance points. We end up having natural support right here, natural support right here, natural resistance right here, right here, right here. Type in a Y, yes, if you agree with that. All right, everybody type in a Y, yes, if you agree with that. That resistance was at 11,100. the natural support has been defined as being 12,680. All right, 12,680. So in this case, this market has not broken outside of this high volume node at this particular point. As soon as it breaks out of this high volume node, the question is, where's it going to end up going? The answer is very simple. It's probably going to end up going somewhere about right here. The easiest space to be able to get out would be somewhere around 11,200, which will be basically that free run area. Now, we also know that we end up having this free run area that end up happening from 11,410, or that vortex area from 11,410 to 11,100. So you can be able to basically place in two orders at this particular point. You have a short-term order, you have a long-term order. Short-term order will end up being from 11,100 to 11,200. The second order will end up being from this overall resistance that end up, or this past support that end up getting broken to be future resistance, and be able to go from there. So for my long-term traders that like to be able to trade it like that, there goes your position. For my scalpers that just want to get in and get out, there goes your position right there. From a buy perspective. Now, from a short perspective, if the market falls down and breaks this natural support, in which we can see from previous history that it's going to have a little bit of struggles being able to break out of this area right here, and there's still a pending order that's been placed in at, for me, at 11,660 all the way down to 10,440. I'm sorry, let's say that over again. 10,680 to 10,450. That will be the next position if it does fall. But from previous history, it's shown that it has not. It's shown that it has not failed there yet, or has not failed below there yet. So there's a lower chance that it could happen if it breaks that area. But if it does, then it's going to fall and fall fast. Type in a while yes if that makes sense. Fatty says double bottom, was able to buy US 30 in NAS last Friday, double bottom. So you caught the whole move on NAS. So you did strategy 4 them, which is basically buying the support, and then after that, taking it all the way up to the breakout area of it. Nice, Fatty. Okay. Yeah, so until that market ends up breaking, there's really no trade to be able to take, but I would place in a pending order. I would want the market, ultimately what I would want to happen is the market to be able to fall, and then after that, try to push back up. If it falls and then after that pushes back up, then that gives us a better chance of being able to know once this breaks, it has a better chance of being able to push out and be able to make some type of movement, and be able to go from there. You don't feel comfortable with it, put a trail stop right behind it, and then let it keep on riding up until it pushes back down. But this is a great area to be able to take a look at. Just to be able to kind of give a little bit of social proof on what end up on certain things that we end up doing. Gonna end up showing this. By way, this is no way to be able to brag or anything else like that. It's 6 years of hard work, if I'm being very honest. So that vortex strategy that we end up talking about, we end up doing that based off of US 30. We end up doing that based off of DAX. We end up doing 86% overall when it came down to those movements. That's everything that we end up doing off of TradingView. The EAs that basically end up following that same strategy have done 48%, 13%, and 8%, amassing over 3,200% when it comes down to that movement. With that being said, that what else? We end up doing that, and we end up doing that inside of here, talking about all these trades inside of this overall area and trying to put them all together. Yeah, you don't necessarily win as many trades as a swing trader. I say anytime that you can be able to do that over 40%, then you do a very good job of being able to do that. But the biggest thing is, okay, well, what is going to end up being your risk reward ratio? What's going to end up being your profit factor? Can we keep the profit factor over 1.5? In this case, we're not there yet, but from a profit perspective, we end up doing exactly what we were supposed to do, and being able to go from there. All right, that is my time. If you like what we end up doing, please make sure that you end up clicking on that boost button. Make sure that you end up staying in touch with what we end up doing overall. And everyone, y'all end up having a blessed day like always. Like always, make sure that you end up planning your trade your plan. I see each and every one of y'all in the next video that we end up having. And keep in mind, on the red brand, we're gonna, for expert advisor reviews, we end up having a expert advisor review on Boss EA, and we have a couple ones that we end up having from our previous versions that we're gonna end up pushing out, so everybody can be able to see what they look like as well. Everybody, take it easy. If you have a chance, look at GBP, hour 30-minute perfect lineup for your strategy. Fatty, you know I got to go, but I saved some time for you. Hold on, let's take a look at it real quick. Fatty, since you're day one, I'll make sure I end up. I wish you would have said that earlier. Hold on, let's see. Okay, what is that? All right. GBP, JPY. It's not ready yet. Not ready yet, but I do like what you say. Let's see. All right. New support is right there. We're still in the middle of it. From an hourly perspective, I can see what you're saying. I can see that there could be a natural position where you could be able to take a look at these highs right here. But for me, it's not ready yet. I'm looking at that based off of the hour. Where's your volume indicator? Let's take a look at it real quick. Trade view. Which one, George? Which pair? Hey, that's me. Chart. Let's see. Oh, and shows. All right. So going through this rather quickly. All right. So that was the last high volume node, the biggest high volume node that ended up popping to the downside. Yeah, it's still not ready. I still believe that it's not ready. There goes your high volume node. Market fell right here. This was the area to be able to get out on that movement. You see that there was a large free run area, and then after that stopped and really started to go into consolidation right there. From here, we end up having another brief consolidation. Right there. Area to be able to get out. Area to be able to get out would have been right here. Market went into another brief consolidation. Just like it always does. You end up having consolidation, breakout point, consolidation, breakout point. Then after that, once it ended up breaking out of this consolidation and went back inside of that free run area. Let's see. Okay, cool. Just checking, bro. Got 90 pips on the 30-minute chart. We were broken to buy mirror. We both have a different way of trading. Both. I believe so. I do. I mean, Fatty, you already done showed me your trading strategy. I know it works. I'm charting this right now because I need to look and see if it's something that I need to truly pay attention to. All right. So, Fatty, this is what I would say right here. Because it's done broke this overall resistance area, if you're gonna look at being able to make another trade or being able to trade it up to a position, that's the position to be able to get out. 162. 162. I would just say 162 is the overall resistance. Once it ends up breaking above this overall high volume node right around 160, 96, and I think it have a little bit of a chance to be able to go. But for me, overall, it goes back inside of that consolidation right there. Hopefully that makes sense. Everybody, I do have to go now. And which I see everybody a little bit later on. Take it easy.